Hello, and welcome to the Crypto Beat. My name is Tim Copeland, and I'm the editor-in-chief of The Block. Joining me today, we have Jose Fernandez de Ponte, Senior Vice President of Blockchain, Crypto, and Digital Currencies. Welcome to the show. How are you doing?
Doing fine, Tim.
Awesome. Before we get started, just a quick note. If you're hiring in crypto, make sure to check out Campus. It's the Block's newest hiring tool out of all your candidates. It will help you pick out the real crypto natives. Enter theblock.co/campus to get a 3-month free trial. Now, today's episode is around PayPal's foray into crypto. But first, I wanted to ask you, Jose, what drew you personally to crypto?
Wow, that's a walk down memory lane. I've been involved in crypto for it's going to be 10 years now, so around 2015. And the reason I got involved in crypto was for payments. I've been a payments person for the last 20 odd years, and I was tinkering with some of the protocols that were available around 2015 when I was working in banking. And I started to look at ways to move value between bank accounts. In that case, it was Europe to Latin America. And we started to do that on Ripple, actually, and way back then. And that's when we squinted hard at that and say, actually, this thing might be worthy for payments. And that took me down the rabbit hole, and I never looked back. So I've been doing that since 10 years ago. I'm full-time for the last 6 years.
Interesting. And is there any element of crypto that fascinates you the most?
For me, it's totally around the ability to move money instantly. As I said, I've been working in payments for more than 20 years now. And when you look at the payment side and you look at the fintech side of it, there is a ton of innovation that has happened in fintech, and PayPal has been a part of that. But most of the innovation is either on the front end or on fraud. So if you look at most of the fintech companies that have appeared in the last 20 years, what we do is either we provide a more convenient way to do something that you were able to do already, or we address how to prevent fraud in places where people are interacting online and cards are not present. When I started to get involved in this in 2015, but then even more strongly in 2019 as the new protocols were coming up, we were saying, look, this is the first time that I've seen a technology that has the ability to fundamentally change how we move value. If you look at, there's a reason why wire transfers are called wire transfers. It is because they were designed to run on Telegram wires. So we're using technology that started 100 years ago. And when you look at credit card rails and ACH transfers, you're talking about technology that is by now 50 years old. It's not very often that you come up with an opportunity of doing something that really builds the thing again from the ground up. And that's what has been the most exciting aspect for me.
And PayPal first entered the crypto space in 2020. Looking back, how do you think its progress has been?
Yeah, we were talking at the beginning. You opened with the PayPal's foray into crypto. It's a 5-year foray, and I think that we are on year 5 of a 10-year journey. It has worked really well. When you look back to the history of what we did launch our first consumer-facing crypto product in 2020. Was the ability to buy Bitcoin and ETH and a couple of other tokens on the PayPal wallet. And we have been making a steady progress basically on 3 buckets. The first part of the story was distribution of crypto to mainstream consumers. There was a moment in which, way back then in 2020 and 2021, there were a lot of people who were interested in starting to get exposure to digital currencies. And people were saying, hey, I want to buy $100 of Bitcoin because I want to start to tinker with it. But I don't know what elliptic curve cryptography is, and I don't know what a non-custodial wallet is, and I don't want to do passphrases, and I don't know the company. I don't know the brands of the companies who are on the crypto exchanges, but I know PayPal, and so we made it very easy. We were kind of a gateway product into crypto for many people, and there was a moment in 2020 and 21 where for the vast majority of our crypto users, we were their first crypto experience, and then many of them stayed with us along the journey. Some of them graduated to go do DeFi and other explorations that we did not support in the platform yet. So in that first bucket of let's make it very easy for a mainstream user to get into crypto, that took probably the first couple of years. Then we had a really big milestone around, I think it was 2022, when we enabled on-chain transfers, because that really changed the profile of our business. We still have those folks who are kind of crypto curious, who want to explore and trust the brand, but we are also now serving a smaller number of much more active users who are people who are saying, hey, I'm a more sophisticated crypto user, but I really want a very easy, very convenient on-ramp and off-ramp. So we have a ton of people now who do more volume, but they find us because they say, hey, I really want to buy ETH quickly with my fiat instrument and then send it on chain and go do something on DeFi or in some other part of the ecosystem. And those folks are the majority of the business that we do today. And then the third part of it was obviously the launch of our stablecoin of PYUSD in 2023, which again was another inflection point in the business. And we are very heavily working now on both increasing the distribution of PYUSD in the ecosystem. It's supported on more than 25 exchanges and wallets, but also making sure that we embed it in payment experiences that we support. Because the stablecoin, the way we look at it is tokenized balance. It's not technically tokenized balance, but people have been used to their PayPal balance and their Venmo balance for many years. And we wanted to provide an instrument that is equal to that, but has the added benefit that you can use it outside of the PayPal ecosystem. So those have been distribution, access to digital currencies, establishment of PYUSD in the ecosystem as a permissionless token, and the uniqueness of our stablecoin is the access to the merchant and consumer base on the PayPal and Venmo side. So continue to build payment use cases on it are the three areas where we continue to build.
And amongst sort of those areas, where are you seeing the highest demand from consumers?
Consumers reach out to us when they tell us, we periodically ask them what they would like to see in the platform. And on the consumer side, very consistently, they are saying that they would like us to support more tokens, and they would like to have an opportunity to generate some type of reward on the holdings that they have. Those are the two preeminent, and then a longer tail of other features. So we are looking into that. There is we will never probably be the place where you go to find 250 tokens. It is our experience is a custodial experience that is embedded on the PayPal and Venmo wallets. So it's an app that does other things in addition to crypto, and we want to keep it relatively constrained in the number of tokens that we will support. But we will continue to add tokens that we think are high quality and they have a utility and a developer ecosystem behind them. As an example of that, we very recently added support to Solana and Link on the platform, and has been very well received by the community. So the buy wholesale part of it continues to be relevant. The other aspect that we see on the merchant side is people want the ability to move stable coins around for crypto capital markets use cases, but also for other use cases. So we are seeing adoption, especially on B2B cases. Part of what we have been doing is on Zoom, which is the PayPal's remittance product. We have introduced a stablecoin actually at two different levels on the stack. On the one side, we added it on the consumer-facing aspect. Let's say that I grew up in Spain. I'm sending money to my family in Spain. I can fund my remittance in a stablecoin in the US, and then it's basically a transaction fee. We don't charge any fees for that, and my family would still receive that as euros in their bank account in Spain. That's the consumer-facing piece. Even probably more importantly, we have added in some corridors the ability to do a B2B transfer, meaning that my experience would still be the same. I would be, let's use Philippines, which is one of the corridors where we do this. I want to send money to my family in the Philippines. I send dollars here from my bank account. My family receives Filipino pesos in their bank account, but the transaction layer has moved to a stablecoin. So those type of experiences that are kind of fiat on the front, but a stablecoin in the back, I think that's one of the places where you will see as gateway experiences for mainstream adoption of stables.
And you mentioned like yield as something that the consumers are looking for. I mean, this is obviously quite common in crypto. Like in Coinbase, you can get like 4% on USDC, for instance. Are you considering like different ways that you could introduce yield products?
We're looking at it. There are a number of regulatory components on that, on how you can go about it. There is, but definitely we see that there is a lot of consumer interest. So we will explore it. As you were saying, it's relatively common in the crypto sector, so it's a good avenue to think about. But for the moment, we have focused much more on adding to the list of tokens that we could support.
And then you said you're going to adopt a fairly sort of conservative strategy on the stable coins. You mentioned sort of the three things you're most looking for. How many sort of assets do you anticipate PayPal adding sort of over the next few years?
I don't have a number in mind. A lot of that is going to be defined by the quality of the assets and also by how much we can support on the platform, purely from a user experience. Again, if you go into a mainstream, we don't want to be the most comprehensive crypto wallet for traders. That wouldn't make sense for us. We don't want to be better at being an exchange than the exchanges are. But we definitely want to be the best mainstream wallet for crypto users. We want to make sure that we can provide enough that people, when they're accessing their ecosystems, they can go and find the tokens that they want with us. I don't believe that we'll probably get into the space of meme coins. We are interested in tokens that can provide utility with a high level, even with a high level of abstraction for a payment use case. That we got interested in Link because oracles are going to be important if you really want to drive commercial activity. Solana, obviously, we deployed our stablecoin on Solana last year, so it's obviously a protocol that is very amenable to payment use cases. When we find more tokens where we're saying a high quality, strong developer activity, utility, and adjacent at least to payment use cases, those are probably those that are going to be higher priority for us.
And you mentioned regulation. How difficult is it to be a sort of very established payments company while also being trying to sort of adopt and experiment with sort of a new technology that's has a bit more of an uncertain regulatory environment?
I would say that it is difficult. It is also the job. I think that that's for all of us who are on the industry. If you look at it, I'm talking now about the financial services industry more than the crypto native industry. There are a couple of ways in which you can go about it. You can follow what we decided that was the right path for us, which is we are seeing a technology that can fundamentally redefine our domain of business. It would be responsible from us not to have a horse in the race. So we need to explore it. We have been very gradual and incremental on how we have been building our stack, and we have been extremely rigorous on the regulatory and compliance side. So we got our first bid license in 20. Well, we launched in 2020. We got our full bid license in 2021. We have established, we got a trust license in New York as well. We have built a lot of things that ride on top of the existing risk frameworks of PayPal. So we have been very deliberate on building it with a very, very high regulatory standard. You were talking about legislation and the framework. One of the reasons why we wanted to issue the stablecoin out of New York and we came to Paxos for the issuance of our stablecoin is because New York has a very clear regulatory structure for stablecoins. And we thought this is the highest regulatory bar in the land, and we want to be in the places that where we can stand by the strongest and the more strict supervision. Is it difficult? Yes, it is difficult, but it's also what provides a head start. If you look at, there is now, because the other avenue is let's sit on the sidelines of this thing. Let's wait for the regulatory environment to get everything to be very, very crystal clear. Let's not take any risk, and then we'll move in when things are clear. And if you look at that, and that's a very full strategy that you can follow as well. And that's what a ton of the financial institutions are these days, especially in the US. We're saying, hey, there seems to be a stablecoin bill that is going to pass, is going to get more clear. And everybody's now looking at the space and saying, how do we get into it? We believe that the work that we have done over the last 6 years gives us a head start, and hopefully we're going to be able to move faster than competition now, faster than competition in fintechs and financial institutions.
And with Trump coming to power and sort of a new crypto-friendly SEC chairman, does this change PayPal's strategy at all now the sort of environment seems to be a bit more positive, or does the strategy stay the same?
It doesn't change the strategy. As we said at the beginning, we are on year 5 of a 10-year journey. So the main principles and the primitives of what we are trying to build are the same. Obviously, with when the environment in the US gets more clear, it will allow us probably to move faster, and it will allow us to expand the portfolio of features that we can offer to clients faster. There is not a change in direction because the direction was very well established. Probably the speed at which we can execute gets faster. And it's not only about the US. I think that is important. The developments that have happened in Europe with MiCA being implemented now, what is going on in Singapore, in other jurisdictions like in the Middle East, Japan, the UK. We tend to focus a ton on what's going on in the US because obviously that's where a lot of the industry is based. But in general, I think that you can see a secular trend about the regulation getting more clear globally.
And what has been the adoption rate among PayPal users for crypto as a payment method?
So let me maybe break that down in two parts. Adoption in of digital currencies in general on our platform. PayPal obviously has a very broad customer base, and in the places where our crypto product is live, which now is in the US and also in the UK and in Luxembourg is our European market now. Especially in the US, I would say that our population reflects the population as a whole. So you're seeing similar rates of adoption that you would see in the overall population. And we run a longitudinal study of consumers that we've been running for years now, where we constantly ask people, do you hold or have you held in the past digital currencies? And I think that consistently we're seeing in the US adoption rates that are slightly past the moment of just hardcore early adopters. I think that we're getting, I wouldn't claim that crypto is mainstream by any means, but awareness is very high. And if you ask people how many of them have experiences with crypto and stablecoins and NFTs, I think that we're starting to be beyond that arbitrary 10% rate of early adopters. So I think that we're getting to the moment in which you start to see the acceleration of that curve. And our adoption, I think it's a reflection of that population as a whole. We have millions of folks who have been onboarded on our crypto product, and we hope that that's going to continue to evolve over time. The second part of your question, there was about payments. Adoption for payments is still small. I think that we see that across the sector, and part of that is something that we need to solve as an industry, which is what we call the Cold Start program. Right? It is very clear if you're a merchant now, the advantages of adopting stablecoins are quite clear. So you're going to get probably lower payment costs. You're going to have instant settlement. You can receive funds 24/7. You can settle funds over weekends. You can send money worldwide. You're not dependent on wire transfers. So when I'm having a conversation with a treasurer or CFO and I'm pitching payments in stablecoins, on the business, both the enterprise and the SMB side, the value proposition for a merchant to say yes is quite clear. If you're a consumer in the US or in Europe or in places that have a very high credit card penetration and people are used to the rewards and their cashback and all of that, and there is not really a pain point about obtaining a credit card, I don't think that we have solved yet the value proposition for the consumer. That's different in emerging markets. So you go to places like Africa or Southeast Asia or Latin America or places where it's more difficult to have a credit card, that value prop is very clear. Hey, this will allow you to do payments that are cheaper or even do them at all if you don't have a credit card. That's why I believe that that's where you have seen adoption for payments so far, is both on the merchants and on regions that are outside the US and Europe. Part of what the job ahead for us and for others who want to be in this space is let's provide compelling value propositions for consumers so that they are willing and able to have crypto wallets that carry stablecoins and they want to pay with them. Because I think that's the moment where you start to kick in those network effects. It's going to happen, but it's going to happen over a period of time. That's why we are very focused now on enabling those payment use cases, but also focusing a ton on B2B and cross-border payments, because I believe that's where the adoption is going to happen first.
Yesterday, Circle announced a cross-border payments network that's focusing on stablecoins. I was curious, what did you make of this announcement?
I saw some coverage in the media. I didn't really see the announcement. I'm looking forward to seeing the announcement because welcome to the game. I think that Circle has been obviously very, very successful at building the market cap of USDC. Building a payments business is obviously you need to have a base of consumers and a base of merchants. I think it's a good thing to have more actors in the system who are devoted to getting the public into stablecoin payments. But I don't think I've seen the announcement from them yet. So I cannot bind because I haven't seen the details.
Yep. And you've mentioned obviously the PayPal stablecoin quite a bit. It's definitely something we've noticed a lot recently, that stablecoins appear to be one of the sort of biggest things in crypto with real product market fit, and that are also very lucrative for the issuer in many cases. How much opportunity do you see in the growth of PYUSD?
We see fantastic opportunity. So if you look at metrics for the stablecoin, we've been in the market for a little bit more than a year and a half now. If you look at the metrics, the industry is very fixated in general when they look at the stablecoins with market cap, which is an interesting one. We are less fixated with that. We look at four things when we look at adoption of our stablecoin as measure of success. We look at number of monthly transactions, number of active wallets every month, on-chain transfer volume, and then we do look at market cap, but as a fourth metric. And the reason we do that is we are building our stablecoin for payments, and there are a number of ways in which we can monetize payment transactions. The industry looks a lot at market cap because issuers today mostly monetize their stablecoin on the yield on the reserve. And therefore, obviously, if you're making yield on the reserve assets, the larger the amount of assets, the larger the monetization and the revenue side. If you are on the payment side, there are a number of ways in which we can monetize that are driven much more by velocity and transactions and the stablecoin moving around than they are on the market cap. We do look at the market cap, but in our minds, the market cap is relevant mostly because it's a proxy for liquidity. So you want to have enough of a market cap. I think that our universe is fiat-backed stablecoins that are non-native yield-bearing issued in the US. If you look at that environment, we are probably the second largest stablecoin in the US now. If you look globally and you include crypto collateralized and native yield-bearing and all of that, we're probably the eighth. But most of those are not used for commerce and payments. So we want to make sure that when a remittance player or when a company that is providing B2B payments wants to enable a corridor, that there is enough liquidity in the market that an enterprise will say, yeah, I'm going to move my money in PYUSD, because when PYUSD gets to, let's say, Australia, there is enough liquidity in Australia to move quickly from PYUSD to Australian dollar. That's the utility of market cap for us. The yield on the reserve, we don't care a lot about it for a number of reasons. First of all, we have other ways of monetizing that. And I guess that probably that's one of the reasons why other players, you were talking about Circle's comments of getting into payments. Maybe that's one of the reasons that they're interested in finding alternative ways to monetize, but I'm elucidating there. So we have other ways of monetizing. Second, yield on the reserve is obviously a function of interest rates. And eventually you believe that interest rates will be compressed, then those revenues are going to be under more pressure than they are today. And third, I do believe that with clarity on legislation, with MiCA being implemented in the US, that we will see an emergence of new users and new issuers and people who will be issuing new stablecoins. So I believe that part of that revenue is going to get competed away. So it's going to be deployed and for the benefit of users. If you look at those three things, that's why, yes, market cap is a factor in our equation. If I had to pick one, I care much more about on-chain transfer volume than I care about market cap.
Do you think PayPal would ever add other stablecoins to its platform?
Never say never. I think that a big principle for us is consumer choice, and that's something that goes beyond crypto. It's part of the DNA of the company. We love it when people pay with a PayPal balance at a transaction, but we will respect how people want to pay. If they want to use their credit card or the debit card or the bank account or something else, we will respect that. So far, we have not seen a ton of interest or demand, and people saying us, hey, you should enable stablecoin X or stablecoin Y. People want one stablecoin, and I think that at some point in time, you're going to see that people will think of stablecoins as digital dollars, and the specific brands might be relevant or not. But we have not seen a ton of demand for people to say, hey, we really, really, really would want you to support this other stablecoin. If that happens, we will consider it because, again, consumer choice is an important parameter for us.
And PayPal stablecoin is currently the eighth biggest stablecoin with a supply of around 800 million.
Yep.
Do you think it has a shot at rivaling Tether for the number one spot?
Tether is what, 160 billion? We are a long ways from that now. I'll give you a little bit of my world view of what I think this is all going to. Well, I think that PYUSD is gonna become larger than it is. I think that we will see that again. If you look at our history for the past 5 years, it has very deliberate, reasonably conservative, and on an upward trend. And I expect that that's what you're going to see with our stablecoin as well. So it's going to be bigger than it is now. My second point, going back to what I just said about market cap, we're not chasing market cap as a metric. I think that is important for issuers who monetize those deals on the reserve aggressively. Is less important for us. So I would love to be as big as Tether in terms of payment volume and global adoption. And definitely that's something where we have an ambition to be the preeminent stablecoin for payments. Market cap, chasing them or Circle or anyone else on market cap is not a priority that we are very focused on. And then I think that the market structure for the stablecoins will change. If you look at the market structure today, what is the market share of the top two stablecoins is 80% of the total market cap or more. I think that probably what you will see is, again, and partially driven by legislation in the US. I think that what you're going to see is a bunch of new stablecoins entering the market from a different number of issuers that are probably going to be smaller in volume than that top two. But probably what you're going to have is a bunch of the stable coins. I don't know what it is. I know it's not 3,000, but it's definitely more than two. So you're going to see a bunch of the stable coins that have market caps in the billions, but maybe not in the tens of billions, and that they are very interoperable because they're issued on the same protocols. And I think that's a more sustainable model for the industry. So yeah, we're going to get bigger. You'll see others launching probably that are going to be in that same ballpark. And I don't know what that's going to do. It's anyone's guess what that does to the situation of others, because hopefully the pie is going to get larger as well. But going back to your question, I'm not obsessed about chasing anyone on market cap. I want to see a multiplicity of stable coins in the market. I think that's going to be a healthy market structure.
There was one kind of data point I was curious about. Like, we saw the supply on Solana drop from a peak of around 660 million to around 130 million. Do you know why there was such a sort of a large decrease there?
Yeah, I think that it went, that happened a couple of years ago. Yeah, the Solana ecosystem is very driven, at least part of that is very driven by DeFi pools. And I think that they reacted really well to our launch in the market and to the very good work the Solana Foundation and others have done to foster adoption in their ecosystem. And then it did correct, but it established at a level that was definitely higher than at launch. So it was, sometimes you see that, you see very, very steep adoption early, and then it goes back to a more sustainable level, which is fine.
And what do you make of BlackRock making sort of big moves into crypto with, the BUIDL token? Do you think it's interesting to see such a large sort of financial company also getting involved in sort of a similar approach?
I think it's fantastic news. I think that BlackRock has been not only with BUIDL, they have also been more active in terms of managing assets and driving the Bitcoin ETFs. I think that having large financial players that see the value of this technology and getting in that space is fundamentally important, because a lot of part of the promise of blockchains is based on technology, but a lot of that is going to be driven by distribution. So having platforms like BlackRock or like PayPal or others who have large distribution networks can make these available quickly for the people who don't want to be running around with non-custodial wallets and getting into the complexity and the very, very advanced users is super important. So I think that if you look at the last 5 years or so, I like to think that we were part of the early wave of adoption of financial institutions getting into crypto. The asset managers in the US have definitely been very active over the last 2 or 3 years. It's not only BlackRock. You see BlackRock, you see Fidelity, you see Franklin Templeton, you see Wisdom Tree, you see a number of the asset managers who have been getting into the space. And I hope that between this year and next year, hopefully we're going to see some of the more traditional banks getting into the space as well. First, because crypto companies need to be banked, and it's important that there are banks that are willing to provide those systems. But also because as the industry grows, you're going to need the traditional custodians who have been doing custody for securities and other things to be able to do custody of crypto assets as well. You need the traditional plumbing of financial systems and the traditional actors there. For the growth of the industry, you need them involved in the industry as well. I think that BlackRock has been fantastic in the work, the others as well, the Fidelities and the Franklin Temperatons, and hopefully we will see again large banks being custodians of crypto assets. I think that's the next one that I would hope that we see soon.
And in October, PayPal said it paid an invoice to accounting giant Ernst and Young in the stablecoin. Have you made any more payments using your stablecoin?
Oh, we move payments in the course of our business on a stablecoin all the time. We do that every week. We definitely did pay Ernst and Young that invoice in a stablecoin, but we moved part of our settlement of the international payments. We're doing payments now to Philippines and several African countries to our disbursement partners there that are happening on stablecoin. Not as and we don't announce it because it's just the day-to-day of the business. We have paid other vendors. We paid our Google Cloud invoice in stablecoin. So it's getting more and more into the fabric of the everyday payments that we make.
Interesting. And you touched on this before with the stuff about BlackRock, but how do you think crypto will affect traditional banking and financial services in the next 5 to 10 years?
I believe you will see a few different things. First, I don't think that crypto will. There was at the very beginning, and if you go back to Satoshi's papers, and there was a lot of discussion about whether crypto would do away with the banks and traditional financial institutions. I don't think that's the case. I think that I don't think that the banks will be part of the equation. Hopefully, we will be able to use this technology to move value faster, and it's going to happen in different ways. So some of the stuff is going to happen on permissionless chains. And we did a lot of thinking when we were thinking about our stablecoin about whether it should be permissioned or permissionless. And we decided for permissionless because in a way we already have a permission stablecoin. If you want to think of the PayPal balance and the Bebon balance that people hold, if we wanted to get cute when we started with PayPal balance and we wanted to call it, this is a permission stablecoin because it's fiat back and it happens in a permission environment inside the PayPal network, we could have called that. Obviously, 20 years ago, there were no stablecoins. So we're saying if we're going to do a permission, we're not bringing an additional value. The value of this thing is that it should be tokenized balance. You can tokenize your PayPal balance and send it outside to someone who does not have a PayPal account. I believe that you're going to see some use cases don't need that. Obviously, banks and JP Morgan and others have been experimenting with permission tokens. I think there's a lot of potential in things like securities settlement. Famously, the settlement of securities happens in a T+2. It takes 48 hours at least to settle a transaction in securities. If you are able to move that to a blockchain ledger and move to T+1 or T+0, I think that's going to be fundamentally changing the game on the capital market side. That does not necessarily require that you do that on a permissionless environment. So if you do a 2x2, you will see experiences that are consumer facing and non-consumer facing. The settlement of securities does not need to be a consumer facing blockchain experience. And then you're going to see the use cases that are permissionless and permission. We are squarely on the permissionless side. We're going to be doing both consumer-facing and non-consumer-facing use cases. I would expect that most of the more traditional institutions will start with permission, which might be very fine for the use case that they're trying to address, and then it will expand into the permissionless side, hopefully.
Yeah, with that comes obviously, a question of, potential freezing of assets, things like that. We've seen, I think, maybe Tether be faster to respond to incidents, and maybe Circle, I think, typically, wants like law enforcement requests, things like that. Is that something that you're having to sort of deal with yet with the stablecoin?
Well, it's very much a regulatory consideration, right? There are many regulatory regimes that require by design that your stablecoin that you're issuing has freeze and seize capabilities. So it's much less a matter of choice. Definitely, you want to issue in the US. That's very likely going to be a requirement that you're going to have. So it's kind of, again, it happens by design. I think there's less left to the decision of individual issuers.
Okay. And then final question, how big are PayPal's crypto ambitions more broadly?
They are very big. Again, when we started looking at this, is if you're a payments company and you believe that blockchain technologies can build the next generation of payment rails, it does not get much bigger than that in our space. Obviously, the technology might happen, or the technology will happen. The use case of payments might move to the blockchain more or less aggressively. But is one of the top priorities that we have as a company. Is one of the reasons why you hear us so much speaking about it and our top executives talking about it. Because if you are in the payments business and you believe, again, that this is one opportunity in a lifetime to change the way that value moves and to deploy that next generation of rails, the bet cannot be, the stakes cannot be much higher than that. We are happy to see that there are other payments companies that are starting to double in the space. Again, we hope that the effort that we have made over the last 5 years is going to give us a head start in that transition. But the moment that when, I think it was in 2019, when we were looking at some of the protocols for payments, purely research, experimentation, and we were doing transactions in the range of 10,000 transactions per second with a cost of 100 of a penny per transaction. And obviously it was in a kind of in a lab setting and it was not in production. And we were saying, look, I know that when we do it in production and real life, it's not going to be this fast and it's not going to be this cheap. But even if it is 10 times more expensive than this, it's still transformational. If you look, and when you see things in production today, and some of the numbers that are published for transaction costs in protocols like Solana, which are in the range of 1 cent per transaction. First of all, it's per transaction and not per value of the transaction, which allows you to do micropayments and a number of other things. But especially, it's 26 times cheaper than moving money on the ACH network. And if you believe in physics, if something can be done at 26 times less cost, eventually the universe finds a way to move to the low-cost environment. So when you believe in that, the ambition is really high, the execution is very deliberate, and hopefully when you look back, and now you're looking back 5 years, and you can see the composability of what we built. First, we built the ability for consumers to be able to hold, and then consumers to be able to send on chain, and then we gave them an asset that is stable and well-regulated, and now we enable that for merchants, and we will continue to build on that composability because what we're building is a Lego, and it's important that all the pieces of the Lego click into each other.
Yeah, I mean, on that financial bit, I guess, when you have a product and someone's trying to, move money and you give them 2 options and they do the same thing and one is 10 times cheaper, it's pretty straightforward.
It is important that it has to be 10 times cheaper, because if it is 20% cheaper, you start to get into a lot of the inertia and people will squint, say, is this worth the headache of doing it? But when you're faced with 10 times cheaper, 26 times cheaper, then you have to have a lot of cold blood not to look away and not to do at least an exploration of it.
Well, that's all we have for today. Thank you, Jose, for joining this episode.
Thank you so much, Tim, for having me.
Awesome. And as a reminder, the newsroom works tirelessly to get you accurate, informed crypto news. If you want to stay ahead, read the block. Thanks, and see you next time.